Hello friends, welcome to this December edition of Monthly Viewpoints. Indian equity markets have been on a tear. Year to date in CY 2023, the Nifty is up almost 16%, while the mid-cap index is up 42% and the small-cap index is up almost 50%. So what has caused this rally in markets? Well, the answer is a reduction in the global macro uncertainty and the results of the state elections in India. On the global front, we have seen the US Fed taking a pause in terms of the rate hikes. The interest rate cycle seems to have peaked out and we expect rate cuts starting next year. In fact, the market's already pricing in rate cuts starting in March 2024. No wonder the US 10-year yield has fallen to almost 4.15% and the dollar index is also weakening. We've also seen a reduction in the geopolitical uncertainty as the Israel-Hamas conflict has not escalated with other countries coming in. And hence, with clarity on the interest rate cycle and reduction in the geopolitical tensions, the overall macro backdrop on the global front has improved. Now coming to India, the BJP saw a resounding majority in 3 out of the 4 state elections. So this has reduced uncertainty in terms of the national elections to be held in April-May next year. India continues to be on a strong wicket as far as the domestic macro is concerned. Today we saw the RBI governor upgrading India's real GDP growth estimate for FY24 to 7% and its policy rate was also maintained at 6.5%. We have seen that crude oil prices have also fallen below $75 a barrel, which should help India to manage its current account deficit. Now going forward in calendar year 2024, the year can be of two halves. Before the elections, we may see some consumer related spending, whereas after elections, we may see the continuing policy reforms and private capex pick up. On the earnings front, the Q2 FY24 earnings season was in line with estimates, and for FY24, we are expecting earnings growth for the Nifty to be around 18%. For FY23 to FY25, we are expecting the earnings CAGR to be around 15%. Banking and financial services, auto, consumer discretionary, and industrial sectors are expected to lead from the front. In terms of flows, we have seen the FII flows coming back in the past few weeks. Domestic flows anyways are quite strong, with the SIP flow touching almost 18,000 crores per month. Now coming to valuations, even after the recent rally, the large cap Nifty 50 index valuations are still close to the long-term average, whereas for the mid-cap and small-cap indices, the valuations are higher than average. And hence, it seems like the large cap seems to be a safer bet than mid and small caps at the current time. Overall, given the clarity in terms of the global macro backdrop, reduction in the election-related uncertainty, and higher confidence in India's growth outlook, we think that Indian equity markets remain a compelling bet for the medium to long term. We offer a basket of funds for investors to choose from. Thank you and happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है। स्कीम संबंधी सभी दस्तावेजों को ध्यान से पढ़ें।